So the Reserve Bank Board left interest rates unchanged at its first meeting of the year. Most Reserve Bank watchers are expecting rates to rise as the year unfolds, but by how much? Lateline Business's economic experts think they know the answer.
The market's pricing in around about 1.5 tightenings by the end of this year, and that's probably around about right. The Reserve Bank's made it pretty clear that it wants to lean against the mining boom, so you'd have to say that at least one more rate rise is probably assured, and I wouldn't be surprised if we end the year with 2 more rate rises and a cash rate of around about 5.25%.
I think the cash rate will be at about probably 5.5% by the end of this year. I think the Reserve Bank does need to move up on interest rates again, but they don't need to move strongly. Inflation's trending a little bit higher, but it's not looking very threatening at this stage. The risks, of course, are on the upside, though, to that forecast. I think if we get much stronger growth out of China, we will see more inflationary pressures here with an economy at close to full capacity and very low unemployment. So there are risks it could go more and could go faster.
We tend to think that the RBA target cash rate will be at 5.25%. At the moment, the Australian economy is going through a soft patch. Inflation is very low. And we expect the RBA to remain on hold for the first 6 months of the year. When we start to get the reconstruction boom from the Queensland floods and also the mining boom states very late in the year, we do think that the RBA will hike rates by 2 times by 25 basis points.
We think the cash rate will finish this year at 5.25%. Possibly 5.5%. The main reasons for that is that the underlying fundamentals of the Australian economy are firm. So that is the mining investment boom is underway, and that is pushing up the terms of trade, which is providing a net injection of income from the rest of the world to Australia. That extra income is creating extra economic activity in the economy. Now, the floods' impact does muddy the waters early this year, and certainly growth will be depressed in the early part of this year, but in subsequent quarters you will see a catch-up and you will see a boost to economic activity from the reconstruction efforts.
I'd see 3 further rises of 0.25% in the cash rate, taking it to around 5.5%. The key factor will be the strength of the economy, which will be pushing the economy to full employment and a bit beyond, generating inflation pressures in the economy. The key factor there is the continuing resources boom, which has been the overriding dominant influence on the economy for the last 5 to 6 years.
Well, if our experts are right, we can expect at least 2, possibly 3 rate increases between now and the end of the year as the RBA tries to head off the inflationary impact of the resources boom.